All right, what is up, YouTube? Once again, I want to make a video to show you guys exactly how easy it is to make 100% in a year, because I've done it before. So what we want to focus on is reading those financials. It takes a lot, because a lot of people they take that easy route out and they start to look towards penny stocks, which are highly risky. But I can definitely show you guys exactly how to make over 100% returns while using blue chip stocks that are worth over $50 or more. And just to see those returns in your account is definitely really fun. But I know penny stocks, it does have some added risk and it does have some added reward to it. But at the same time, I'm not comfortable with risking my whole account, with playing a penny stock, or maybe even risking half of my account while playing a penny stock, because I'd rather play with something that's more volatile. Not more volatile, but I'll play with something that has more volume to it. Also, I want to play a company that's actually credible as well, because I would say most of these penny stock companies, there's sometimes a lot of shorts that do come in once you get a huge spike, and it typically does bring gap downs to happen in the stock price. Or if you wanted to hold a stock overnight, which I really don't suggest, especially if you're penny stock trading, sometimes you might see those huge gap downs because a lot of people are starting to sell, and there's not a lot of volume after hours, and especially when the market opens, there's not a lot of people trading penny stocks. It's mostly people trading ETFs, or probably trading NASDAQ or New York Stock Exchange, stocks of that nature. So as we see right here, we see the stock was definitely barely breaking through 75 on the last video that I did make earlier. But now we see the stock is definitely trying to tick higher here. Like I said, I'm in the stock about 71.96 in my personal account. That is my average. And as we see right now, I'm doing really good, well over 6%. And, the past 2 days since I have had, exposure to this stock. Now, what made me want to go ahead and pull the trigger is, this is where it gets really tricky here, guys. Check this out. We zoom in right here. I know you guys are paying attention to the RSI. I know you guys are paying attention to the daily moving average. But let's go ahead and check out the Chaikin oscillator. This definitely measures where the momentum is in the stock. I bought the stock where the momentum in the stock was pointing down. So that typically let me know that the stock will have more up room to run when it does start to run. And we will break past this all-time high of $76 that it did set yesterday. What we came off of yesterday is that, there's just a lot of bids going on. A lot of people were able to, capitalize, definitely get in at their perfect share price at around $61. I really wish I was able to get shares at $61, but as you see, they were able to release that news out really perfectly. That's, it's really good timing on the news. But, looking forward, this stock is worth about $90 right now. So what we're looking at right now, we're looking at a stock that does trade at a discount, relative to the price increments that I do run on stocks. And as you see here, you do see that increment rule actually works, as the year progresses on. So with that being said, guys, we're going to blow past 80, and we're going to start to see $90 here really quickly here. So we tried 60, we go to 80, we go to 100. But we can do 30, 60, 90. Either way, however you want to do it, we can definitely play it like that. But I really value the stock at $90. I still, there's a lot of up room, especially when we talk about Red Dead Redemption. Also, when we talk about the new release of the NBA 2K later on in the year. There's definitely a lot of bullish sentiment going on with the stock. And as you see here, this stock definitely gets overbought. Majority of the time, it does trade. This will maybe buy the stock when it was overbought. I would say last year, the stock was heavily overbought, but I still bought into it because it was a growth name that I believed in. Also, I was aware of this. I was aware of the games. I've used the products on the daily. Like I just got through playing Grand Theft Auto and 2K. I at least play one of those games probably every day, just about. When I'm bored. But a lot of people, there's a lot of engagement going on with this Grand Theft Auto, Take-Two Interactive, and we can also go to EA Sports, and we see EA Sports definitely moving higher here. And which, this might be a $120 stock here. Like I said, guys, we can play the $30 increment rule, which leads the stock to go past 120 or settle at 120 here. But it has to be some consolidation here. So I don't expect these stocks to keep running up this high, in this overbought level. But there shall be some consolidation here. But, we broke that $75 handle, which means that it opens the door to go to 80. So I do the $5 increments when I start to, invest and check out things week by week. I look at the $5 increments, but we see we're blowing through these levels really quick here, showing that There's a lot of growth ahead for these video game stocks. I cannot stress that enough. Now, getting on to this 100%. When you guys want to do 100% in the market, it comes with doing your homework. It comes with knowing exactly where the charts are showing you. You see this right here, $35 is the low. Now, if you're aware of what this company was about, Take Two Interactive, you probably would have been in at about $7 here. So we see the stock. We probably have to go way back. We see this. Okay, we might have to go a couple years, more years back. But as we see right here, we see the stock is definitely trading at $19, and I know a lot of people probably weren't not aware of exactly what this company did hold. Now, as you see how big Grand Theft Auto has become, and how Red Dead Redemption 2K, they're still making sales on those games. Now, this is definitely a strong franchise. The company has made some really good moves towards investing, and I must point out that the stock, the price per share is above $77 right now, real time. So, there's that. Also, we see that the stock is definitely due for a small pullback here, because we see the chalk and oscillator is definitely showing us some upward momentum that should be checked down pretty soon here. Also, we see the RSI showing a lot of buyers coming in on here, especially on a 3-year level. But when we want to do 100% in a year, it takes it takes a lot of research, takes a lot of time. A lot of people might want to do a penny, go the penny stock route, start to playing a lot of risk, take those big losses, also take some big wins here. But I do not prefer to jump in that penny stock market, because I understand that if I do play blue chip stocks, my my risk is very low, but my reward is very high. And typically how we look at that is following the RSI, following the chalk and oscillator, looking at the volume, daily movement average, as well. You can do that with the penny stocks, but you have to find a lot of people to buy them, so that way the stock can rise back up. So pretty much what you're doing with penny stocks, you're searching for volume. You're searching for the one that has the right amount of volume. But when it comes to trading blue chip stocks, you're going to play that one that always have really good volume. We see stock right here always in the millions here, and that's just my preference. But I know a lot of people they do trade those penny stocks below $5, because they're really volatile and they have the tendency to explode. Probably get to you 100% or more in a year, probably past 1 month, depending on which stock you're playing. But I really don't prefer to do that with my money. I'd rather trade blue chip stocks, and I'm like I said, I trade what I know. I trade blue chips because blue chips give me the most success when I do trade it, because I really don't have time to wake up early in the morning, trade these penny stocks for about give me about 5 minutes of excitement. I'd rather see growth names like this. Buy right here at 71.96, I think the average was. And as we see here, the stock is steady moving up. So right now I'm doing just about over 7% in the stock currently, and we will see the stock move higher. And like I said, guys, I bought shares about $48, sold at just around $60, and we see this company is still moving up. So when we have been growth names, we definitely cannot trade those growth names. It's kind of a own type of thing. So we see Apple. I know a lot of people probably were trading Apple in that $90 to $100 range back when Apple was trading kind of sideways there a couple of years, or I would say 1 year ago. We see Apple just explode. We see, I took gains at Apple 120, but we see Apple move even higher. We see the resistance right here for Apple, and we see Apple gap higher and take all the way off, because people are starting to own the name, become passive on it, and don't really, trade it around, because people are looking for names that grow over time. And this is an easy way for you to 100%, right? I hope I'm not losing you guys, but what we do to find 100%, we want to make sure that the company is being successful, capitalize on all the investments. Also following the chalk and oscillator, showing that Apple has a couple, I would say Apple has some down momentum coming up. We see right here breaking below that chalk and oscillator here. And what happens here is that, we want to make sure that anytime we invest in a stock, we want to make sure we have a goal to set. So if we want to do 5% in a position every time we do open up a position, that should be your goal here. But I really don't want to stress on setting goals here. If we can get to 100%, that's okay. If we can get to 50%, that's okay. But as long as we know the goal is 100%, and I also don't want you guys stressing out over making 100%, because if you are trying to, stress yourself out trying to make a lot of gains, you're going to see yourself take a lot of riskier trades. So we don't want to focus on the risk, because if you focus on buying what focus on the fundamentals, the technicals, I'm pretty sure 100% will come to you a lot easier rather than you stressing out trying to find, that 100%, or I would say that one stock that probably moves over 20% in a couple of days will probably find that stock that moves 20%, in one day. So we don't want to focus on, stressing ourselves out. We want to calm down, look over the financials, make sure that, the company is actually successful. We want to make sure that we're parking our money somewhere because, dividends actually, add to that 100% as well. I think I've collected just about, let's check out right here, my Robinhood account. I would say I think 4 companies have paid me dividends so far. My account is still moving higher, which I really do love. Let's check it out. Dividends for the year. Okay, I have dividends by Starbucks, dividend by GDX, and last year I had a dividend from Darden Brands and also GE. Darden Brands is still moving higher. We see Darden Brands probably with a price target of about 120%. If you're able to understand exactly where the growth is, it should be easy for you to make 100%. We see Apple. Apple's where the growth is. It's their own name, not traded. Anytime you find a growth stock, it's an own type of stock, not traded. So when we can find those growth names, we own it. We don't trade it. We park it for a while, check out how the company's doing, assess quarter by quarter. Should we still hold on to the stock or should we add on to our positions? And I'm pretty sure you will get to 100% really quickly, especially if you believe in a company and, the company's actually producing some really good results. So that's all I have to say on that. Also, I do make a couple trades here and there. We do have leverage ETFs that can help you get to 100% really quickly here. We see this leverage ETF here. Fill the gaps. Like I said, guys, stocks will fill gaps. And this is what made me buy Take-Two Interactive. And I'm going to show you guys that again. Once again, I cannot stress this enough. Stocks will always fill their gaps. You see the stock gap up right here. And we see the stock, fall right back down, consolidate some gains here, and fill this gap, take right back off. And that's typically what you will see with all stocks that will run up or produce growth. And what made me buy here is, I was patient. I see Take-Two Interactive hitting 70 or $76 the other day, hitting 75, hitting 73. But what I noticed is that there is a gap it must fill for the stock to go higher. And once I realized that, that's what made me buy the stock below $72. I say, okay, I'm going to buy the stock below $72 because I know at $71.60, the gap will be filled and the stock can go higher. Sometimes stocks must fill gaps to go higher. And this is exactly what we're seeing here. The stock was able to fill the gap and go higher. We see the gap set right there. If we look at it on a technical basis, we see the stocks definitely filled the gap. That's simply what we want to focus on. Honestly, that's all I have for you guys. When we look at, those top losers provide, a really good return for you, especially if, they're down over 80%. Oh yeah, you can actually do 50% in one day. So we don't want to get confused about, I would say the opportunity in the penny stock market. So when we do see top losers, we do see stocks that are down, 50% or more, 30% or more. We want to check that out, see if they're oversold. If they give us an oversold signal, we definitely want to look into buying those names for the day. Remember, it's a day trade. Mike the Day Trader, this is what we do. We day trade that stock for one day, get our percentage return, and get out of the stock. Well, I have a guy in the chat room notoriously known for getting 100% on stocks that fall over 80% in one day. Right? He shows returns. I'm a little sad that he doesn't actually tell us exactly what stocks to buy because I'm not really looking at top losers all the time, and sometimes I'm not really looking at the market all the time because I'm really focused on investing. So when we do get those growth names, we want to pay attention to, especially if we get a growth name on a sell-off or if we get a really good trade opening up. We could probably do 10%, 20%, 30%. Depending on how much the stock is down. And also, we don't want to force any gains. If the stock is overbought, that's time to get out. If we see upper momentum is starting to top out, we get out. We don't want to force it. We don't want to stress ourselves out trying to, find another stock to play. So that's all, it's pretty much it. So that's exactly how you can do 100%, right? It comes with a lot of hard work, a lot of research, homework, and a lot of people, what they do is they use penny stocks as a way to, not do homework, not do research, and play the more riskier side rather than playing the. I would say this side is more safe because it comes with volume. It comes with that increased volatility that you look for in penny stocks. You can find it in blue chips as well, especially if you do your homework and you see something. If you see a stock that's undervalued, it will happen later on in the year. People will see the undervalue in it, and buyers will come in, come back in for the stock. So there's I know a lot of people don't focus on blue chip stocks, but this is exactly where it's at. You can especially get to pay a dividend as well. There's just a lot of things that people miss out on when we start talking about blue chip stocks, because some people just don't look at them because they don't see any growth. They don't see any I would say any worth to buying a blue chip stocks, but they're sadly mistaken. I did 100% just doing blue chip stocks. I did some day trading on penny stocks, but majority of the time, if you go back and look at my videos from last year, I was trading Salesforce back when it was $61, trading Wynn Resorts at $90, trading a lot of blue chip stocks, and taking gains, $5, $10, $15, $30 at a time, and keep building that up. I know, it might take time, but this is the safer route for going into doing 100%. Now, if you want to start stressing yourself out and do 1,000%, that's absolutely I wouldn't say it's impossible, but that's really rare for somebody to really rare for somebody to do 100, or I would say over 1,000%, or look at 500%. Right? We can say, okay, we probably bought Take-Two Interactive. We're probably doing 100% a year, or we bought a company at ground level at IPO price, and now all of a sudden, we're doing really good. We see Kim Moore's. We see $5 was the low, $46 is the high, and we see the stock is on a sell-off. Why is it on a sell-off? I don't know. Let me go ahead and open up a trade right here in my account, because I see that the stock is at that price that I sold it at. I sold shares around $41, but I'm trying to understand why the stock is down. Because when the market is up, this stock tends to roar higher. When the market is down, this stock tends to roar higher. I'm not sure why the stock is down. I might have to do more research on it. But like I said, guys, we want to pay attention to all markets, all sectors of the markets. We want to understand where stocks are going, what pattern we're on. And, this is the difference between knowing, if you're in a double top, double bottom, head and shoulders, right? Knowing those patterns can make you avoid any losses, which can, create that barrier. So that way, you get out of stock at a low point, or get out of stock at a high point, and you get back in the stock at a low point, and that interest, that percentage return keeps building up, it keeps churning, right? So anytime the stock gets to that overbought level, it's time to get out. We see momentum riding here in this bull market. We see the stock market go down 400 points, rise back up. Now we're broke, now we're broke even. Now we're positive just about. And we see a lot of buyers coming back in the stock. But, like I said, guys, we don't want to stress ourselves out trying to, impress other traders or trying to do anything like that. We just want to take some financial gains here, or, do your financial goals here. We want to set our goals small, right? We want to, we're beating our goals at that small level. Now let's raise our goals up just a tad bit, just to see how we would react to that goal, to that goal set, moved up. And I'm pretty sure you will see results happen if you actually move up your goals. And, I wouldn't say move your goals to 5% and then move it up to 100% because you feel really confident, because you see a lot of people doing 100%. We want to move from 5%, we want to move to 10%, or maybe even do 5% to 7%. I know that might be a slow return, but you have to start somewhere to understand and how to gauge yourself. Right? We can look at the market to actually, grade exactly how we're doing. If you can't beat out the market, what are you doing, in the market? So, Take-Two, we're up about $1,600 in there. This is definitely a position for the long term. Twilio back at 26. Like I said, find growth names, get into them, hold them, invest, and you'll do 100% really easy. You don't even have to trade any stocks. That's the point about it. You don't have to trade anything. You could just invest the whole time. There's no reason for you to trade in and out of stocks every single day. You can just buy, you probably buy one stock, or I would say buy one stock. You probably buy a couple stocks here and there and hold them throughout the year, and just let that money increase the whole time. We see Berkshire Hathaway dealing, going back to 160, bouncing back to 164. People are only going to, feel more comfortable once Buffett, I would say authorizes that share repurchase program. So every single position I do have, I'm very aware of how the company is standing. So anytime you do invest in a company, we want to understand how the company is doing financially, what other investors such as yourself are expecting for the company to do, what are you expecting the company to do. This is what makes people really good traders. This is what sets you apart from that amateur trader. That amateur trader that just knows about penny stocks, that has no growth in the market, that can't see any growth in the market, right? Because they are so clouded with penny stocks, they don't understand that people are moving those stocks, whether they like it or not. People are moving those stocks, and you just have to be aware of that. So I do a lot of research on companies that I do like. Unfortunately, they won't be penny stocks. They will definitely be stocks that do have growth, that might pay out a dividend. So what I do is I buy stocks after I read their financials, after I read the news, because I will be updated on that on that company's news and know what to expect from the company in the coming days, or probably in the coming months, or maybe for years. So that that will set you apart. And once you feel once you feel confident about a company doing really good, now is the time to check out and see if they pay dividends. If they pay dividends, it's another plus to the name. We see UPS. I was able to buy UPS, got paid dividend from UPS this year. We see UPS dip at 103, which I think I bought shares 103. Stock went to 109 on increased dividends talk. We see that increased dividend happen here, and I was able to get into that increased dividend. I got into that increased dividend on accident because I felt like the company would actually do really good, because what the company or what the CEO came out and said was we see really good growth. But what I didn't understand is FedEx is the better competitor here. When you look at it, I know sideways returns are happening. We see that we have a support line here. We might see sideways trading the whole time for the whole year. Who knows? Who knows what breaks us out of this sideways trading range? But whatever happens, we will see UPS. We will see FedEx start to move in that upward momentum range. So with that being said, guys, that's all I have. I know I keep talking on and on and on, but in order to make 100%, you have to put in the homework. You have to do the research, and you have to understand patterns to charts. That is really key when you're dealing with investing. When you're dealing with the psyche of other investors, how they react on news. Should if you get a bad article come out, such as Domino's Pizza, we see Domino's Pizza sell off right here. Like I said, guys, that was definitely the buying point. Domino's Pizza definitely sold off on an article saying that they don't see Domino's actually improving sales, or they might miss their sales call for the earnings quarter here, and we see the stock definitely tick higher. So like I said, guys, I was looking at the stock at 175, 170ish. I said this is a $200 stock. This is time to buy it. Unfortunately, I didn't get any shares here, but this stock will continue to run higher. Hopefully during the year, I will probably buy some shares here at Domino's Pizza, because I look at the financials. I could probably buy some at all-time highs and probably buy some later, because I know that the stock is worth maybe I would say $250 a share here. If we're doing those $30 increments, you already know where I put the stock price at. So with that being said, guys, do your homework, research, understand how stocks move, understand the patterns of these charts, because that is key to making gains. Understand when a stock is going to break out. Understand how much upside that stock has. So take care, guys.